morning, sir, Dr. Ajay Kumar Thakur. To my viewers of SMBConnect, Mr. Thakur has been a pioneer for MSME exchange in India, BSE MSME exchange, and he is a veteran of finance and share markets. So we would like to discuss about how startups and MSMEs are going through financial issues, how they raise their finance, how they maintain their business, and what are the key issues in financing. So I would like to we would like to discuss with Dr. Thakur with the same on these issues. So here we would like to know from you about what are the key challenges for MSMEs in terms of financing, in terms of market sustainability, and the financing overall has been changed since some time. The ESGs have come into play, the AI has come into play, there are regulations and all. So we would like to discuss on key issues of financing. And as you have been a pioneer of BSE MSME exchange in India, and as far as my knowledge goes, we have some 470 companies, almost 470 MSMEs that are listed onto BSE MSME exchange, and some 20%, 20-25% companies have gone onto main board of BSE and NSE as a whole, if I am right. So I would like to know from you, Mr. Thakur, first of all, that what are the key challenges of for MSMEs as far as financing is concerned in past 10 years and now, and where do you see it going forward?
Thank you, Sanjeev ji, for inviting me on your channel. It is always a pleasure to connect to you. Of course, I have spent almost 31 years in the capital market. And of course, when this responsibility of launching the SME platform was given, nobody has believed or nobody has confidence that this will ever take off. But the stock exchanges have worked very hard to ensure that the backbone of Indian economy, that is small and medium enterprises, should get equity funding to prosper themselves, have a sustainable business model, and they don't have to rely only on debt financing.
Exactly.
In that, I think the SME platform of the stock exchange have done a great job. Though most of the time they don't get appreciation for that. But I think both the stock exchanges worked very hard and ensured that almost 1150 company got listed because of that. They have raised almost 40,000 crore rupees, and the market capitalization is almost 4 lakh crore. So in that way, I think that this SME platform is very successful. No, but as far as the challenges with the small and medium enterprises are concerned, there are many challenges. The biggest challenge is financial management. The second concern is you don't have the skilled manpower that is required. Third, there is a huge competition. Most of the time, they don't use the technology for the growth of the business. So these type of challenges are there. Then there are payment issues from the clients. So these issues together, create sometimes, financial stress into the balance sheet, and they have to run from pillar to post to ensure that the company should keep on moving. The world is changing very fast. Artificial intelligence you have talked about, but there are many other things. For example, the way the automation is happening into the companies.
Right.
That is also keeping many of the SMEs on the toes. Okay, and for automation you require funding, and unless until you get fund, you can't go for automation, and there will not be much of the efficiency in the company. So for all these things, if you think whether you are recruiting good manpower or skilled manpower, or want to have capex or opex in your company, if you want to do marketing or brand building for your products, for everything you require funds. I have met almost 42,000 promoters, and let me tell you, in most of the companies, I can say that the balance sheet was not so strong. Okay, and therefore, financing is always a big concern in these companies. Banks also do a lot of due diligence to ensure that the funds that they are giving is going to the right company or not. Otherwise, it can become an NP. So
Yes.
there are so many issues that keep on cropping in the small and medium enterprises, and because of which there is always a stress. So unless until, and in fact, if you see all the companies in the SME space, which is in India, they are more reliant on the debt financing, and they have taken a lot of debts, because of which, again, they have to keep on paying in terms of EMI, and that also create hole in the balance sheet. So unless and until they access to equity financing, they can't grow. And that's why this SME platform was created, so as to provide equity financing to these small and medium enterprises, so that their concerns can be taken care of. They can have a strong balance sheet. They can have brand building. The credibility of the promoters can increase. So overall, this I think this ecosystem that has been developed has tried to take care of a lot of concerns of the small and medium enterprises.
Thanks for your initial comment. Actually, before we part this entire conversation into three parts, three key parts. Before IPO, during IPO, and post IPO. What MSMEs need to do to have their businesses growing? I believe that you're the most suitable person to ask one question. Why raising money through IPO and why not through IPO?
Well, I always see, I would not like to touch the macro enterprises, because this is SME stock exchange. So this stock exchange provide financing to only small and medium enterprises. Okay, we don't touch macro enterprises, because they are not in the formal sector. If a company has to come to the stock exchange, they need to be in the formal sector, and only small medium enterprises have that capability to remain in the formal structure and access the capital market. So pre-IPO, of course, they need to do a lot of things. Before IPO, we have seen in small medium enterprises, the compliances are not taken on priority basis. Okay, so there are a lot of compliances. So before IPO, they need to be properly compliant. Their books of accounts should be in place. Provident fund, etc., payment, etc., has been done properly. So once the books of accounts and all the compliances are in place, then only they can go for IPO. So pre-IPO, they need to ensure that their books of accounts, their compliances, their other processes, in the companies are being taken care of. And after that, they should proceed for IPO. So once they are ready with all these things, merchant bankers comes into play, and even after that, if something is missing, then the merchant bankers take care of that. So once they are ready for IPO, coming for IPO, then the merchant banker does the valuation of the company, have some investors meet to assess that what should be the right valuation of the company on which investors are comfortable, and then they bring IPO. And post-IPO, of course, the compliances are going to increase. In the case of SME, of course, there is lesser compliance in comparison to the main board of the company, but still they need to be much more compliant than they were in the pre-IPO stage. So post-IPO, once they get listed, their compliances increases. And because of this increase in compliance, let me tell you, the investors' trust in the company increases. So other investors at various prices keeps on coming to the comes and invest into the company, and because of that, valuation keeps on going up. Also, if a company is well compliant, then trust level goes up, and when the trust level goes up, the credibility of the promoters goes up. Then the
Yes.
investors' confidence in the company increases, and
Right.
the next round of funding also, whenever they want to do, they can do.
So many a times I have seen that the company is very good. They are doing actually good. Their balance sheet is also okay, but they have somewhere taken it so casually that their papers don't match with the expectations of the markets and all. So what these companies should do to keep in mind that somewhere they need to go to market at one point of time or other day. So what are the key things that they should do on priority basis before going to the market?
So that's what I said, that,
Yeah.
unless and until they are well compliant, investors will not look
Yeah.
into them. See,
So
today,
that's what I
yeah,
want to know,
so
that what are the key.
today,
Sorry to
if
interrupt. Sorry
today
to interrupt. Yeah.
promoter need to understand that investors have got hundreds of choices.
Right.
Almost 5,000 companies are listed with the stock exchange.
Yes.
So investors have always the choices. For investors, there is no dearth of companies where they can't invest.
Mhm.
As a promoter, when you are reaching to the investor, you need to ensure them that you are well disciplined company, you are a well compliant company. Unless until you show them, the investors will not have the. If you don't have compliances in your company, if your
Mhm.
books of accounts are not in place, investors will always have the fear that the money tomorrow if they give, they may get diverted.
Right.
So, you need to give as a promoter, you can't take anything very casually. Okay.
Mhm.
World is
Yeah.
trending, market is changing. Today you may be confident that you are running the
Mhm.
company, very well. Tomorrow, there may be some, changes happening in the market. Some new process has come,
Right.
new products has come, and it will disrupt your company. So I
Mhm.
think that, promoters, that's what I always said, that in order to gain the confidence of the investors, you need to ensure that your company is well compliant, is disciplined, all the processes are being followed, books of accounts are properly maintained, and there is no diversion of funds. If these things are being ensured by the promoters, I think investors will come forward to invest in this type of company.
Yeah, that's very important. That if they are compliant from very beginning, and if they don't diverge fund from something for which they have been raising the money. So these are the key things that smaller companies need to understand. At the same time, this is a market where new kind of investors have come in. I mean, sustainability is an issue. Green energy is an issue. Green compliance is an issue. Environment is an issue. So these kind of investors are coming into play nowadays. I'm talking about ESG, in fact, actually environmental sustainability governance in your company. So how these new smaller companies should keep themselves aware of these things to attract new batch of investors who are more keen to environmental sustainability goals.
We can't expect from very small company or a smaller company to meet these goals. So even regulators want to have the larger company having these ESG things in their place. Okay.
Mhm.
But as you keep on growing, as you move from a small company to medium company and to a large company, you have to ensure that you are going to achieve ESG goals. Tomorrow, there are various consultants who will guide you. The cost is also not more.
Mhm.
Can guide you to ensure that you have, ESG in place in your company. And they are investors, they are, foreign investors also, sometimes HNI or domestic investors. They always give priority to those companies
Yes.
where ESG is being maintained.
Mhm.
So I think over the time, as the company keep on growing, they should ensure that the ESG goals are being achieved. And the other investors who are very mindful of this type of things, they should keep on participating in the company and take it to the new level. Now, as you know, the environment is taking very front seat. No,
Yeah.
the awareness about the environment is growing. It has to grow more, okay, because we are living in the same place on the earth, okay. So I think it is more like, for the interest of everyone, for the humankind, that all the companies should maintain the ESG in their company.
Mhm. So I would like to know, as I asked you the very first question, that why to go to stock exchange and why not to go to stock exchange. In relating to that question, I would like to ask this, that what are the other key areas from where these small companies could raise finance other than banks? And you mean the venture capitalists? Do you think that there are markets where these small companies can go?
See, over last 10, 15 years, there has been a lot of innovation in the financial market. You have got all sorts of funds. You talk about, there are angel investors, there are venture funds, both debt equity side. You have got private equity, you have the capital market, you have the SME platform. So from all these places, you can raise the funds. As long as you are able to convince the promoters. Many of the time I have seen the startups, the SME, they are very passionate about the product. They're very passionate about the company. They think that whatever they are doing, it's great. But it's not always from your perspective. It's always from the investor's perspective, where the investors understand that whatever you are doing is right, sustainable, and going to create profit in the company in the long run. Okay.
Okay.
So all these things are being taken, into mind by the investors, and always understand the investors, they are catering to various type of companies. So unless until you convince them, they are not going to put money in your company.
Right.
So and let me tell you, it's not a small process. When you go to the investors, they will ask thousands of questions before putting a single penny. So you need to be very strong in pitching your company. Most of the time, what I have found that the small and medium entrepreneurs don't have that pitching capability. Okay, they are unable to, explain about the business of the company and its sustainability and its future prospects.
Exactly.
Right.
So
So
what these companies do?
if they are unable to themselves to it, they put the right people in the company or hire some advisor or consultants who can properly guide them or who on their
Right,
behalf
right,
can
right.
pitch their company to the prospective investors.
Okay. So then comes a question that, uh, sometimes these companies are not very uh, focus on to changing regulatory issues. In terms of, see, what SEBI said some 20-25 days ago, that you should be very, I mean, alert while investing in small companies or those MSMEs. So sometimes these companies are not very aware of these activities. What's the issue? Why SEBI says that a small company should investors should be alert from small companies, and what small companies MSMEs should do to have investment in their businesses?
The investors need to be alert in all sorts of companies. Okay,
So why
whether it's
why,
a
why
small company,
specifically
medium
MSMEs?
companies, large companies. See,
Okay.
what is being told that when you invest in any company, you should do proper homework.
Okay.
Capital market is a very risky market. Okay. If you don't do if as an investor you have not done the proper homework, if you have gone, in FOMO and invested into the company, or some
Yes.
euphoria has come in the market, and without doing the proper, homework at any valuation, you start buying the shares of the company, then there are always the chances of the investors losing heavily. Okay, it can happen anywhere. Okay, the SME platform, mid cap, or even the large cap. We have seen it happening into the
Yeah,
large cap companies. There are many
yes,
examples where the investors have lost heavily. But
yes.
that's what SEBI always want, that the investors need to be alert. Okay, unless and until investors will be alert. And why small companies? Because sometimes what happens in euphoria, we don't understand the basic fundamentals of these companies. And because something is happening to the market, we rush investing into these companies without understanding in what business and what sort of business and what valuation these companies are trading. And therefore it is very important that the investors should be careful. Okay, they should avoid herd mentality. They should not carried away by rumors.
Mhm.
Because tomorrow something if goes wrong, everybody has started, questioning the regulators. So that's why it's always, regulators are always arranging a lot of investors awareness program. Okay. And in this awareness program, always regulators talk about do's and don'ts of investing into any company. Okay.
So
So investors
from investor point
investors
of
always need to follow their advice and accordingly invest in this type of companies.
okay, so from investor point of view, you have made it clear that the investors should be very, even investor need to be aware of some companies, their backgrounds and all. But sometimes what happens that regulatory changes come all of a sudden. I mean, in next 2 months or 3 months. But small companies are not very prepared to that. So my question is that how these MSMEs anticipate such kind of regulatory changes? Is there any
If you
mechanism
if
to
you see the
understand?
regulatory changes that has come, I don't think, they have only talked about eligibility criteria. Okay.
Okay.
That what should be the eligibility criteria. I think operating profit of 1 crore and all those things there, many companies are there
Yeah.
who can meet this sort of track record. So I
Mm-hmm.
don't think they have made much of the regulatory changes. Okay. And I think that is the basic that they have kept so that more and more small companies can get listed. Okay. And also the investment ticket size, they have increased from a lot to 2 lakh. So I think that, with these type of regulatory changes, what just SEBI wants to give hint that, not everybody should come. Only those companies where there are chances that, they can grow, those companies should only come and get listed onto the stock exchange.
Okay. So two, three.
And before that, let me also tell you, before that, SEBI has come out with a consultancy paper whereby they have taken the advices of a lot of people. And after taking those suggestions, advice only, they have come out with the regulatory changes.
Okay. So before we wrap up the last question, I would like to ask that do we have two, three things that small companies need to again understand that this is my time to go to market. This is not the time to go to market. And what we need to do to be sustainable in the market.
But see, once the company meets the eligibility criteria, there is some eligibility criteria already defined by SEBI and the stock exchanges. Okay. If they are meeting those eligibility criteria, they can always approach to the stock exchange, hire the merchant banker and get themselves listed onto the stock exchange. Now, the reason for listing onto the stock exchange are twofold. Okay. Number one, to raise funds. Okay, and also ensure that in the times to come, their valuation should also grow as the profitability grow. They should bring compliances into the company, have transparency in the company so that investors start trusting the company. So that is the purpose of the company to get listed. If they are meeting those eligibility criteria, they must come. They are welcome into the stock exchange. They get themselves listed by taking the service of the merchant banker.
Okay.
But if they feel that if they are unable to meet regulatory compliances on, just a minute.
Sorry to, yeah, the video seems to be paused
Yeah.
again. The video is paused, I guess.
Yeah. I'm doing it. Yeah.
Yes.
So if the company is thinking that, okay, though they are meeting the eligibility criteria, but they are unable to meet the compliances on yearly basis, or they are not seeing a jump in the profit on yearly basis, maybe they are thinking that they will be able to develop only 5-7%, then I think they should, avoid getting listed. But if they feel that they are meeting the eligibility criteria, there is good jump in the growth in the years to come. They are going to grow in a big way. They will be able to meet the compliance requirement of the stock exchanges. Then of course they are welcome to get listed onto the stock exchange.
So finally, sir, I would like to know one thing once again, that this is my question from almost thousands of MSME companies. Again, please give me 2 reasons why to go to MSME exchange and 2 reasons why not to go to MSME exchange and go to any venture capitalist.
Let me tell you why they should come to the stock exchange. Number one, to raise equity funding, okay, and grow their company.
Okay.
Make the investors their partners.
Yeah.
Bring transparency into the company. Do the due diligence. Enhance the visibility of the company and the goodwill of the company.
Yeah.
So these are the reasons for getting listed. Okay, and in the times to come, they can raise further funds. Okay, so that is the one reason. There are many reasons why they should go for listing.
Okay.
Now, second, what you ask, that why they should avoid a stock exchange and go to the
venture capitalist. Suppose some company wants 50,000 crores. Okay, sorry, 50.
Let me tell
crores,
you. Yeah, let me tell you. Normally, what we have seen is that the asset-light model company with new innovation, or who has the ability to disrupt the way the things are happening into the market, that the way the businesses are happening. Okay, for example, Zomato has come or Swiggy has come. They have disrupted the market. Okay. So if they have that innovation in their product, whereby they can disrupt the company with their asset-light model, then I think they should approach to the PE and VC or the venture capitalist for raising funds.
Thank you. Thank you so much, Mr. Thakur. And definitely this was very insightful conversation with you once again. And I would like to come once again and again with many other issues related to share markets and all. Thanks for being here. Thank you.
Thank you.
Once again. Yeah.